Good morning, everybody, and welcome to today's morning market. So just following on from Jeff's morning markets yesterday, which was all focused around UK inflation, today I'm going to focus on Eurozone inflation, so the figures that were confirmed yesterday morning. So just to give you the headline figures, Eurozone inflation came down from 8.5% all the way down to 6.9%. Okay, so why is this important? Why is it that Jeff talked about inflation yesterday? Why is it that I'm talking about inflation today? So inflation, as we all know, has been elevated, and it's been elevated for a lot longer than many forecasters would have thought it would have been. What does that mean? Well, it means that central banks have needed to raise interest rates to help dampen demand and therefore help dampen down inflation. What does that mean for both equity and bond markets? Well, it means it's actually been quite a challenging time over the last 12, 14 months for investors. But what was the announcement yesterday? So what really were the key details? So as I said, inflation fell from 8.5% to 6.9%. And when we dig into that, the majority of that fall comes from energy prices, and particularly comes from the fall in natural gas prices that we've seen since Russia invaded Ukraine. But what else can we tell from the announcement overall? So just looking through the figures, you can see that European central bank policymakers are maybe starting to get a little bit worried that high energy costs have seeped into the broader economy and linger into everything from services to wages, so making inflation a little bit more difficult to tame. So probably to give you some examples of that, if we exclude unprocessed food and we exclude fuel, prices actually accelerated from 7.4% to 7.5%, while actually if you then take an even narrower inflation measure, so stripping out alcohol and tobacco, inflation actually picked up from 5.6% to 5.7%, and that was in line with preliminary data. But what does that mean for interest rates? So when we look at market forecasts, forecasters are expecting a 0.25% increase in interest rates from the European Central Bank, so the ECB, on May the 4th. Now, the preliminary inflation data is actually going to come out on May the 2nd, so that will be the key driving metric as to whether interest rates will go up by 0.25%, or actually, as in 1 in 3 forecasters are thinking around, actually go up by 0.5%. And just finally for me, just a plug for tomorrow's podcast, which we're actually filming a little bit later today. It's got myself, George Bell. Within there, we've got Neil Rayner, and it's going to be hosted by Peter Bald. And following on from Jeff's morning market, my morning market, it's focused around inflation. So please do watch to help you understand all about inflation, but more importantly, help you understand how you can do more with your money. Thank you very much.